Okay. We are back. Couple of minutes before we get started. Hang tight, everybody. Okay. So, clearing your cache and leaving your passwords should leave your passwords, don't you think? It should leave your passwords. But sometimes things don't work out. Okay. We're going to get started right about now. $10. Oh, U.S. leading index, I believe they're going to announce. All right, folks, let's go into the trade room at 10-minute trades. Welcome to the Natural Gas Storage Report. My name is Lee Goldstein. I'm the trading director at 10-minute trades. Please remember that it's possible to lose money trading futures, so trade carefully. I want to welcome all the folks that are watching us on YouTube. Let me just lower my volume over there. So give us a like, subscribe to our channel. And Greg, I haven't talked to you all week, so I just want to say hello. All right. I knew you were going to type that. And then I was thinking to myself, well, how am I going to answer it when Greg types hello? Anyway, getting ready to make next week's schedule today. Today is the 18th. Next week, normally the slowest week of the month, the week before jobs reports, ISM reports, the week after next is the biggest week of the month. All right, so let's talk a little bit about the natural gas report. Natural gas, oil, I think we can all agree there have been changes. Oil, I'm not ready to give up on oil. It stopped me 3 times in a row. One stop was horrible. 2 were normal. And yesterday was a normal stop. Very disappointing. But I'm probably not ready to give up yet. Maybe I'm stubborn, but it's been trading so well for so long. I might want to give it one more week to see if it's going to recover and go back to the way it's been. If it's changing, then we might have to consider a different method. Really, for us, a different method would be trying to do reversals with it until the breakouts start getting consistent again. I mean, that's how we noticed that breakouts got consistent again. Now, natural gas went through a period where we had 3 bad trades in a row, and we didn't put it on hold. And since that time period, it's had 3 out of 4 winners, but it feels different. That's the only thing I want to say, that if you're an experienced natural gas trader, I think you'll agree it feels different. Okay. So it's just, I was thinking of adding contracts to natural gas, but until it goes back to the way it was, if it does, I'm going to stay conservative on natural gas, because natural gas, like oil, can bite an account. In the old days, when I first started trading news, I was a TradeStation user. No software, pretty much just working it on my own. I was actually paying some programmers to write simple bracket programs. TradeStation has a slower data feed than, in those days, it certainly had a slower data feed than Ninja. Not really Ninja, you're dealing CQG, rhythmic, kinetic. But natural gas was so insane in those days, words can't describe it. I mean, I'm being serious. We've never seen anything like it in all the years that maybe the first year I was here, it was pretty crazy. It was pretty crazy. Now, when I say crazy, what does that mean? It means whipsaws like you wouldn't believe, all the time. All the time. Also, it responded much larger impacts to, and much larger offsets. In other words, nowadays, natural gas gives you a pretty good response to small offsets. In the older days, the offsets were much bigger also. In other words, we're looking for a negative 17 billion cubic feet, I think is how they value it. Negative 17 billion cubic feet of storage. No, or is it barrel? No, it's not barrels. Now I'm drawing a blank on what they call it, but let's see if they say anything here. Cubic feet. Yeah, cubic feet of natural gas. Okay, so I'm not crazy. And what I was saying is, in the old days, if you could get 30 billion normally every week, 40 billion. The offsets were huge. Now the forecasts are much closer. And I don't think it's that the forecasting is better. I really don't. I think it's responding differently to the size of the offset. I think that's really what the issue is. So last week, let me show you a losing natural gas trade. I'll show you what it looked like when we were concerned. And I just want to give everyone a heads up. I am not doing a Canada retail sales trade room at 8 o'clock tomorrow morning because that report has not moved in a year. And I shouldn't have put it on the schedule. So I want to apologize for that. It's being downgraded to a watch, not because of any other reason than it hasn't been moving. And that's the honest truth. And I'll have a schedule. I'll have my schedule for next week pretty much laid out later today. I'm not anticipating a huge busy week next week. The week after I am. The week after will be much busier. So let's look at, I wanted to look at a couple of losing. Let's look at the DMM. So it was in early February, end of January that we had our problems with natural gas. And it's been better since. I mean, if you look, 3 out of 4 better. So, but it doesn't feel the same. So that's why I'm saying I want to trade it carefully and keep an eye on it. I mean, that's the honest truth. I want to trade it carefully and keep an eye on it. I don't, everything in my trade setup is fine. Hey, I'm just curious. Ask if anybody that gets the DMMs, how many of you look at this area on the DMM up here where it talks about peaks, minimum, and maximum ticks? Type yes if you look at that area, no if you don't. Yes or no? Come on. There's more than a couple of you. Okay. Just informational here. Just informational. Okay. Not everybody gets the DMMs also, so. But if you do, I'm just curious if you look at that. Do you read the text? Do you read the text? Yeah, I do too, Greg. Absolutely. If you were going to say what's the, not counting the setup, ignoring that the setup is there, what's the most important element for you on the DMM? Just curious again. Fred says the journal. That's what I assume you mean by the history, Fred. Brian, yes, agreed, 100%. Greg, you like the text? I think, obviously for me, I think the journal and the text are very important. Very important. I think there's always room in everything that anyone does to make things better and better and better. That's my constant goal, to get better and better and better. I know sometimes it's impossible to believe that that's true, but I wake up every morning completely optimistic. Let's look at a couple of bad trades. Like I said, I was going to. I just want you to see a bad trade. I mean, I never show bad trades in the room, hardly ever. Let's take a look at one. just because February put us on guard. On guard. It was like, who's that famous dueling guy with the eye patch? Not Pancho Villa. Who's that? Who's the most famous eye patch duel? Who's the most famous dueling guy way before superheroes existed? Oh, I can't think of the name. I'm such a dope. All right, doesn't matter. Not Errol Flynn, but it's more of a cartoon, more of a not a real person, Mike, but an Errol Flynn, not Zorro. Ed, you're thinking Zorro. And I'm not thinking Zorro. Maybe I am thinking Zorro. I don't know. Nobody knows who Zorro is anymore. I guess, should they make a new Zorro? I think so. I think it's time to make Zorro a superhero and make his sword could be some sort of a crazy light phaser kind of crazy weapon. Mike, that's funny. So 211 was a stop. Let's see what that trade looked like. Natural gas. But you can see natural gas has been really trading well for most of the year. Natural gas has been a very pleasant surprise this year. And even if I get stopped out today, as Jaquan says, I will not go crawling off into a corner. If you agree to trade natural gas, then you agree to take the risks. And natural gas can bite, but it can trade nicely also. This trade looked like it was beautiful, but it wasn't. It's hard to see with the naked eye what really happened. That's why, remember, you look at the range chart. That one looked like a perfect trade, but you see what happened? It filled me. The liquidity was terrible that day. And it filled me at the bottom of the candle. That's what happened. That's why that trade did not work. It filled me at the bottom of the candle. That sometimes happens with natural gas because it's not super highly liquid. Okay. That's something you have to understand about it. It's not a super high liquid index. So what other indexes kind of fit that bill? The Australian dollar fits that bill. It's not ultra liquid these days. But we still had a nice jobs report trade last night. It doesn't mean that all trades are going to be bad, but it explains sometimes why you might have a loser when it looks like it should have been a winner. And it just puts sense to the event. And it gives you reasonable expectations if you understand the truth, and I'm all about truth. I don't like to mislead. And it's why I said what I said about my trading this morning. And I say it all the time. I am a better teacher than I am trader. But I wake up every single day trying to do better. And that's the best lesson that I can give, that if you wake up every day with the attitude that today's going to be a better day, man, that's going to help you. Whether it is or not, doesn't matter. But it's going to help you put the odds on your side that it will be. I mean, let me show you last week's natural gas trade. March 11th. And we were down some money. There's been so March 11th. It only did that because I moved my stop. I couldn't move my stop fast enough, but it hit my target of 8 ticks like almost instantly. And then, wow, it reversed fast. Natural gas does not always reverse. And there was less gas used than expected by a lot. You would have thought maybe it would have gone up that day based on the news. Less used, more used. No, I take it back. If less is used, right, there's more around. So price goes down. If there's a giant build, see, less used is a build. You follow? Less used is a build. More used is a drawdown. Drawdowns generally cause the price to go up. Builds generally cause the price to go down. Sometimes it just ignores that. Mark, I don't know if you're joking or you're serious or if you're just busting on me. Make me feel like crap. Thanks. All right, let me set my trade up. Thanks, Mark. So the standard fare over, conservative natural gas trading, 8 ticks, looking for 8 ticks, a bracket of 5, just trading one contract until it's like I said, I really wanted to increase my natural gas contracts, but I want natural gas to show me, I just want to be more comfortable that it's trading the way it's been trading all year, that something is not really changed significantly with the index and the way that it's trading. Our entry time is 10:29:59. Breakout trade. And you could call it a breakout. So one more time to look at the setup. Bracket of 5. Just one contract. Looking for 8 ticks. Stop is 15. And a lot of people always ask, like, what's your risk to reward? And natural gas is the perfect report where you're willing to trade an upside down risk to reward. Yes, of course, it could backfire and you can lose almost double what you expect to win. But when you look at the way it traded all year, it was very, very positive for a long part of the year. And the reason that our stop is 15 rather than 12 is because there were a couple of trades, not most of them, but a couple of trades that would have survived had the stop been a little bit bigger. So it's not always the only number that affects the risk. It's not the only number that affects the risk. And the reason I say that is because if it never hits the stop, and don't get me wrong, I'm not saying it doesn't, it does. But if it hits the stop rarely, and you more often have time to get out of a bad trade, or you hit your target 70% of the time, then it can be a trade that you're willing to take a little bit more risk on because of the success rate of the index and the report. So I guess what I'm saying is, on a report that we often see a good and a profitable move, you're not as concerned about risk to reward as you are as a discretionary trader. A standard discretionary trader deals with risk to reward much more differently than we do. Events are different. It's a different mindset. And sometimes I get a person that comes to a webinar, and it's not that I have a fight with them, but we're so off base in communicating, me and them, because they're thinking complete discretionary rule-based trading for events. And you can't. Because if you think totally rule-based, discretionary rule-based trading for events, then you will not be able to trade events, because there will be times, like I'm saying, that you'll be more than willing to have a bigger stop than profit. And the way to deal with that too is, when you're trading a report that is working, you got to trade it bigger. Anyway. So natural gas, we checked our time. Do you understand what I did? I didn't talk through it. I go to the website, time.is, to check my computer sync. I want to be in sync when I'm trading events. Okay. I'm just hearing the news in my earbud. That's why it's sometimes I get quiet. Boy, the world is a different place, isn't it? Cryptocurrency and gold trading the way it's trading, and the NASDAQ moving 100 points and more. Everything's been shaken up by this world crisis. It's pretty incredible how different the world is. It's really, really something. Now, you've got a really interesting reversal area. High of the day, PP, and 6 p.m. open. Can it get up there? 37. It's almost 100 ticks away. I doubt it. I doubt it. But wow. That's pretty amazing, isn't it? It's pretty amazing. You don't see pivots like that very often. Now, remember our little template, and I know time's getting short. Our daily volume template now shows days until rollover. And AMP, when that number is 5, AMP doesn't allow us to trade the current natural gas and oil contract. AMP is our clearing broker. Ninja does let you, because they're cleared by Dorman and Phillips Capital. They have different rules. And now whatever happens, happens on this trade. If you take natural gas, if you agree to trade natural gas, you're agreeing to risk at least 150. So we got a minute and a half. Our bracket is 5, 10-second cancel. Just looking for 8 ticks. Looking for 8 ticks. Why? Because that's been the best target throughout the year. Now, if you're trading multiples on natural gas, 5 is the first target. All right, we got about 15 seconds. It's like what a 2 weeks. What a 2 weeks. 5 ticks it would have hit, right? 5 ticks it would have hit. Do you wonder how I do this? Does anybody ever wonder how I do this? So I got filled down a little bit far down the candle. Okay. That's what hurt. That's what hurt me. I got filled too far down that darn candle. And I don't think it would have even, yeah, it would have. Let's look and see. So my fill, my short was 29. My short was 29. And it went 7 ticks. Okay. Do you believe it missed my target by 1? It went 7. Filled at 29. It went to 22. Yes, Sim made it look like a great trade. Because there was no slippage with the fill, Fred. No slippage with the fill. That's why Sim would be a winner. You don't have the real life slippage. Now, there was an 11 billion drawdown, right? There was negative 11 billion, but they were expecting 17. So there was more gas around, right? It could have worked. Could have worked. It could have worked. It's 3 out of the last 5. It's 3 out of the last 5. So, I mean, we've been trading natural gas most of the year, but it definitely has a different feel to it. But there was nothing outrageously terrible about that trade, other than, you know, you have to look at liquidity. That's one of the reasons you don't get filled as well as you should, or as well as you think you should. And that's why a lot of people will not trade natural gas. I want to thank our YouTube subscribers for watching. We tell the truth. We show the truth. Subscribe to our YouTube channel, and you can learn a ton about trading events and which ones you feel are safe for you to trade and which ones you don't like. So sign up for our channel. Give us a like if you learned something. And Chantal, you can shut down YouTube. No problem.